Hey there, this is Nick Zagar, and welcome to the Dentalligentsia Podcast, where we talk about big picture items for dentists so that they can make the best business decisions for their businesses. Uh, Today, I have a special guest, Carole Stabile. Hey, Carole, how are you?
I am doing just beautifully. Thank you.
I'm so happy to have you. You are a really special guest because you've helped a number of our clients, and we wanted to kind of spend some time with you here and be able to kind of share exactly what you do and why you do it.
Well, I appreciate that. And first of all, I want to tell you that I think your clients are very fortunate to have you to represent them. There's nothing like having an expert represent you in something like a real estate acquisition or in a negotiation. There's so many unknowns. You know, you'd never want to go to a interior designer to have your teeth done. and you want to go, if you're going to get your real estate done, you might as well have somebody who knows all the ins and outs about it and also who is representing your best interests. So
100%.
I think they're lucky to have you. And as part of your resources, it's knowing about people like me. My company, CSSI, does cost segregation. We have been doing it for over 20 years. We have done over 50,000 of these studies across the country. We've never triggered an audit. It's about the most conservative thing you can do with your tax situation when you're doing a real estate transaction. Basically, what cost segregation does is it segregates the elements of your real estate into the correct bucket so that you can depreciate it at the right time. Straight line depreciation on a commercial real estate transaction is 39 years. 1/39th every year you get to deduct from your real estate for the time of ownership. And it resets every time you buy a building. So even the building could be 200 years old, it'll still reset to a brand new cost segregation starting at, or a brand new depreciation starting year one over 39 years. But things like carpeting, landscaping, lighting, cabinetry, they depreciate over shorter periods of time. So what we do is we do an engineered study. It takes the depreciation and puts it into the right buckets. So a cabinet depreciates over 5 years. Your cabinetry goes into a 5-year bucket. Your carpeting depreciates over 7 years. It goes into a 7-year bucket. So we do the study. You attach the study to your tax return, and you get to write it off in the correct way.
Very cool. Well, that is a great summary. And I know you've been in real estate for a while. How did you get into the cost segregation aspect of the business?
Well, I was, at the end of my commercial real estate career as a broker, and I really wanted to spend time traveling and not have to put people in my car and be in my territory and just show people real estate in this location. I ran into somebody who worked for CSSI at a networking event. She told me about it, and it was really a perfect solution. It's a way to be able to use my real estate background to sort of understand what people need when they're doing transactions. And the thing that I like best about it is at the end of a transaction with me, everybody's happy. When you do when you do a real estate deal, it's it's long and hard and frustrating work to get a lease or a sale negotiated. And there's plenty of emotion and there's plenty of hurdles to jump over to do a real estate. And nobody knows that better than you, Nick.
Yeah.
So, I understood that and I was used to it. But what's really nice about doing cost segregation is it's very simple and straightforward. And you're happy, the client's happy, the IRS is happy, everybody's cool with it. It's not anything that creates any difficulty.
Well, let's jump in a little bit because when we're working with a client, a lot of times they will buy a building, and if they're a dentist, they have to build out a very expensive, a very expensive dental office, which can cost, 400, 800, over $1 million on top of the cost of the building. And then likely, if the condition of that building when they got it, maybe it needs new roof, maybe it needs new HVAC, maybe they have to redo the parking lot, landscaping, all of that kind of stuff. And so, give us a little bit of a nutshell about idea about how your process really benefits your clients, or tell us an awesome success story of how when I would work with somebody like that and introduce them to you, how it affects them. What's the bottom
Well,
line?
for example, we worked with one of your clients in Michigan who spent about $1 million on a property, and then their improvements were close to $500,000. So we were able to do a cost segregation on the property in the first year, where we saved them approximately $75,000 on their taxes. And then we did in addition to the cost segregation study after the improvements were done, which were about $500,000. And that saved an additional $50,000 on their taxes. So we were able to save them in the year 1 of ownership and year 2 of ownership, and save, in addition to them, being able to use all of their traditional savings that they would do on the purchases of the items, like of dental equipment. We were able to deduct the fixtures that go into the site, and so that created a total of $120,000 and change worth of savings for the dentist on his facility. And the thing is, you can use the write-off in the first year or anywhere in the first 5 years of ownership. You can spread that deduction. So if you don't need that whole $120,000 in the first year, you can spread it over the first 5 years of ownership.
So in layman's terms, this business owner or dentist bought a property. They're paying taxes, and essentially, this is a massive tax deduction where they might get a pretty hefty, check, I guess, refund check back from the government. Is that it?
Refund. It's not a refund check. It's money you don't send. It's a loss. So you're going to write it off, and this is on your personal taxes. It's not property taxes. It's on it's on the K form that you have as an ownership entity of the property. So it goes against your personal income tax, not your property tax.
What types of properties, is there a specific type of property that benefits most from these types of studies, or what are the criteria that you use to determine whether a cost segregation study or analysis is worthwhile?
I wish it were called something else. Cost segregation is a mouthful. Whenever I have to leave a message for someone and say, I'm with I do cost segregation, I have to spell it's what? Anyway, it is cost segregation is what it is. It's the way you describe it. And really it can start, it's commercial property. It can't be on a personal residential property. And its medical properties are the best kind because they are so fixture intensive. Anything that has a lot of cabinets, a lot of countertops, a lot of sinks, things like that, are very great for cost segregation. There's a lot of stuff, a lot of meat. It's much better than doing an industrial property, right? Because you've got the walls also depreciate. So, and it starts really at a property that costs $200,000. You can make it work for a cost segregation study. So anything above $200,000 for ownership, which is like almost everything, is worth taking a look at. It doesn't cost anything to get an estimate. I need very little information to get an estimate done that is pretty thorough. I need to know the address. I need to know what they paid for it, when they bought it, and what they're spending on improvements, if anything. And then I can provide an estimate from there. They can put that estimate in front of their accountant and make a decision about whether or not it's a good idea to spend that money.
Are
Because
there
there's
any, yeah, are there, I know from my perspective, we always want to be in front of a potential client or client as early on in the process as possible. Is that similar with you, or is there a time period when it's too late, or how does that really work?
It's too late if they've owned the building for more than 10 years. To get an estimate, if you're looking at a property, it never hurts to get an estimate about what the value of the cost segregation is while you're looking at a property. Say you've got a building that you're looking at in Clarkston, Michigan, and you want to see what the cost segregation benefit would be. Just give me that information. I'll send you the estimate, and you can put it as part of your equation of looking at the property. Sometimes it's helpful if you're doing a lease versus buy situation and you're looking, should I lease this building? Should I buy this building? Sometimes the cost segregation can help make the argument to purchase because of that nice write-off.
Are there any misconceptions or anything that you come across when you're speaking to people who are interested, or how do you deal with that?
It's funny. I had a client in Lansing, and he said, I get so many calls for so many different kinds of things to help me with my properties. He says, and when you called me, it sounded too good to be true. Like, how could I possibly have bought this building and now suddenly have an extra $70,000 in my pocket? And so that's the biggest objection, is it's too good to be true. It's got to be illegal. It's got to be, I'm going to run into a problem with Uncle Sam, whatever. That's objection number one. The reality is, this is one of the most conservative things you can do. It's a way for the Treasury to keep cash in the hands of people who use it the best. It's entrepreneurial money that stays in the marketplace. So it's a good way, and it's also just a logical way to own property. The 39-year depreciation is a baseline, easy, depreciation system. It's not the right way to do it. If you've got something that depreciates over 5 years, why depreciate it over 39 years? Doesn't make any sense. So that's objection number one, too good to be true, or it's going to trigger an audit. I'm going to be in trouble with the IRS. Are they going to buy it? The reality is, CSSI is a my firm, I'll toot my own horn for a minute. We're a very reputable company. The Treasury Department is used to seeing studies from us. There's a comfort level in the number of studies that we've done over how many years. It's, we get the blessing. The other objection that I get sometimes is, oh, my CPA takes care of that for me. My accountant makes sure that I'm handled. The reality is that our biggest customers are CPAs and accountants, because we have, CPA has to know everything. They have to know a little, and their job is to keep you from getting into trouble. Their job is to prevent mistakes. Their job is not to know every little tiny element of depreciation in the way we know it. We have a super narrow scope of understanding that's very deep, as opposed to your CPA, which has to know a little bit about everything. They have to keep you out of trouble. Our job is to maximize your deduction.
So if you are an investor or a business owner, and you plan on owning the property that you're considering a cost seg on, really you're front loading your deductions on a multitude of items, and so that's where that tax benefit comes in. And so, if you're planning on selling it sooner rather than later, maybe it's not a good idea. Am I right?
Right. You have something called recapture. So if you're flipping the property, it's not a good idea to do a cost segregation on it. If you're keeping it for more than 3 years, Actually, yeah, it's like 2-3 years is the benefit to the fee for the cost segregation study, because the recapture is not 100%. It's not dollar for dollar, and the fee is usually a pretty small portion of the ROI. If your return on investment for a cost segregation study is usually better than 10 to 1. Sometimes it's 25 to 1. Sometimes it's 40 to 1. It depends on the size and scope of the building.
Wow.
Yeah. So it's an excellent ROI.
My next question is a little bit, crystal ballish, because we don't know the future. But how may changes in tax laws impact cost seg in the future? Are you aware of any changes moving forward, or?
Well, in 2017, under the first Trump administration, they enacted a program called 100% bonus depreciation, where you got to write off everything, no questions asked, first year. In the Biden administration, it started to dissipate. So you could do it starting in 2022. It went down to 80% bonus depreciation, then annually by 20% increments. So by 2027, under the current program, it will only go down. You'll have to use the first 5 years rather than the first year of ownership to use the depreciation. That's a little complicated, isn't it? The expectation is that the 100% bonus depreciation will be going back into effect in this administration. The other thing is, though, that it can be retroactive. So say you do a cost segregation this year and you get the 60% bonus depreciation, you'll be able to claw back and get the additional 40% in the following year. Maybe. It's not certain. So the expectation is that it's only going to get better.
So really, in essence, anybody who's investing in real estate, or anybody who may be buying a building, that this is something that they should absolutely look into for long-term tax strategy. I mean, there's really no
downside.
No real downside. I mean, you can do it if you'd like to, and understand what the benefits are. But it sounds like you touched on this a little bit earlier. Some investors or business owners, they may be worried about IRS audits. Can you talk more about that? Or
Sure. Okay, we never trigger an audit, but that doesn't mean that people don't get audited. So if somebody's gotten audited and we have done a cost segregation study on their property, our studies include 100% fee-free to the building owner for our support. So any supporting documents they need, any representation in an audit that the client needs, we provide it at no additional cost. And it's pretty. We've had one of my associates had a client who was audited, not because of us, but they were audited, and she said she couldn't believe the depth of the service we provided with the supporting documents and everything for the audit, and how much we were there to every step of the way. The other thing is that the way we do our site surveys and our information collection and everything else that's needed to do the study is very thorough. So we don't ever use drones. We use on-site visits. We don't, every bit of material that we provide for this cost segregation study is everything that the auditor would want. So we've always got the data collected in an organized way that is appreciated by the auditors.
What is the difference between a cost seg for a new property acquisition versus one that has been owned for several years? Would you be able to kind of do a side-by-side analysis to see, because obviously, who knows how, I guess you'd have to work really closely with their CPA to see how they had depreciated certain items in the past, or?
Yeah, it's not really, we just get the depreciation schedule from the accountant, and then we put that use that against any other additional depreciation. We always find lots more than the accountant does. So what we do is we just use the depreciation schedule that they've had so far. We do something called a 3115, Schedule 3115, which is a change of accounting. So if the only difference between doing a study on a new building versus a study on a building that's been owned and depreciated for a while is that you have to do a form called a 3115. We provide the 3115. It's an additional cost. A 3115 for us to do it costs $750. And we do the 3115. It gets attached and it gets
Talk
going.
to me a little bit about a situation where, let's say a dentist buys a piece of land, and it could be from the time that they buy that land, it could be maybe 2 years after they go through entitlements and construction until they actually have an actual facility that they can work out of. How would you work with them?
We don't do the cost segregation study until there's occupancy. They have to be it has to be in use before you can do a study.
I imagine in a situation like that, it's got to be astronomical savings, because it could cost $3-4 million to, depending on the size and scope of the facility.
Sure, it's our fees they go up a little depending on how much the building costs, but that's why the ROI can get to be so high, because the fees sort of they end at a certain rate, and then the building can be a $4 million building, and the fee is going to be like a really small portion of the savings. But it's just anytime anybody has a building that they're looking at, or that they've purchased, or that they are building, we can do that estimate and let them know what the value of it's going to be. So it's it's always good, but sometimes it's really good. The other thing, we have another set of studies that we do. It's called a 179D, and that's on a building that's larger than 20,000 square feet. And that is if they've had a new roof, new HVAC, or new electric lighting, etc. It's a separate study called the 179D, and that is usually worth about $1.50 a square foot. And our charge for it is about 15 cents a square foot. So that's a different estimate and a different study that we can provide, but that's on a existing facility that is improved.
Talk to me a little bit more about how you work hand in hand with the client's CPA, because I imagine there's a lot that goes into it, or you have to kind of work together to kind of, I guess, when we're talking about the mutual client's overall tax strategy.
It's very little. We make it as easy for the CPA as possible. The only thing that we really need from the CPA is the building cost basis. The number that we use for the cost basis for the building, net of land doesn't depreciate. So your land value never goes into the cost segregation study, because land is just land, doesn't depreciate. But the CPA will need to provide us with the number that he or she is going to use as the building basis, because our number has to match their number. And that's the only thing we need from the CPA. And also, if they have owned the building over time, we'll need their depreciation schedule.
How do they determine the actual land value?
Sometimes they just use 15 or 20% of the purchase price as sort of a generally accepted number. Depends though. If you're in New York City, your land basis is going to be a lot higher than it is if you're in suburban Detroit. But so you've got that number, but you've also got sometimes they use the county records. Sometimes they use there's a different. It's not set in stone about how they determine what the land value is. Usually figure around 20% of the building cost is a good rule of thumb, but it has to be exact. So that's why we have to get the number from the accountant.
At risk of bouncing around too much, because is there anything else, any types of questions that I haven't really hit on that you wanna talk about specifically?
Let's see. Well, here's the thing. Getting a cost segregation study, it's something that's very personal to the ownership. So even though it looks like it's a fantastic and something that should always be done, sometimes it doesn't. Sometimes people don't want to do it, and it could just be they don't need it, or they don't want to spend the money on the fee, or that I don't even. I never ask anybody why they don't want to do it. I just let them go. It's not something that I'm going to be harassing anybody or requesting, answers about. It's like here's the estimate. Here's what it costs. Do you want to do it? Yes or no. And if it's no, I disappear. So you don't have to feel like it's going to be a lot of attention from me once I send an estimate out. So I think that's something that I just want to make clear. It's like I give you the estimate, you tell me whether or not you want to do it, and away we go. The process takes 2 to 4 weeks from the time we receive the requested materials and do the site survey, and then you just attach the study to your tax return, and you're off to the races. So I think that's really all I want to emphasize is get the estimate, doesn't hurt a thing. And
so the estimate takes 2 to 4 weeks, or
no, the study.
Okay. So the first process is, hey, Carole, I just bought this building. Can we do a quick study to see whether this is feasible? Then once I have that data, then we go and we dig a little bit deeper. And from there, I hire you, and it takes 2 to 4 weeks after that
to get the study done. Yeah. So here's the information I have, Carole, to on this building that we're looking at buying or that we've bought. Get me an estimate of what the cost segregation study is going to give us. So I get you the estimate. It's going to have a high end or a low end number of what your expected value of the study is going to be. Even the high end number is usually low. I mean, we're very concerned. We like to overpromise or underpromise and overdeliver, right? So the number I'm going to provide is conservative. And then once you decide to do the study, you engage us, and then it's 2 to 4 weeks after that. So it's just two processes. You get the estimate, and then you engage us.
Talk to me about this. There's a partnership. We got four doctors. Maybe they're equal partners. Maybe they have different different ownership stake. Is that more complicated or less complicated, or?
Oh, you just divide the savings by the percentage of ownership, and then it goes into their tax return.
So
we can provide we can divide the study if you want us to. Let's say there's 6 doctors in a practice. We can do the study in such a way that it's divided per percentage ownership and get sent out that way. So it'll go to each of their individual accountants.
So I buy a property. I do I go through it and I do the study. I'm front loaded on my depreciation, and then pretty much as opposed to the 139th per year, what does it look like? I mean, what does the next 20 years look like? I'm just not, not able to depreciate nearly as much. What
It's
percentage?
really like no more than 20% of the building value goes into the cost segregation study. It's usually like about 15% of the building value. So you get a big chunk up front, and then you're still getting depreciation every year of ownership after that, just not as much. And this is all just about the time value of money. So it's better to have money now than later. That's why you do a cost segregation study. It's not rocket science. Money now is better than money later.
And I think that you touched on it, but this is strictly for commercial properties. So for example, if I wanted to buy a single family home, but use it as an investment, that's not,
Oh no,
that's,
if you're renting it out, if it's a commercial property, if you're earning income on it, you just can't do it on your own personal. Like I have a client who has purchased a property that he uses as an Airbnb. And he just has to remove the part of the year that he uses it as as value for the ownership. And then, so like, it's like 20% of the value of the property is, doesn't go into the cost segregation study.
well, that's really interesting. I would have thought that, I don't know it all, and that's one of the best parts about being in our field is that I feel like every day I'm still learning and getting new and interesting information. But I was kind of living under the assumption that it needed to be, at least a 4-unit property to be considered commercial.
No, no, no. We do tons of Airbnb and VRBO and those types of properties, single family dwellings. We do zillions of them. They've become more and more popular. So we do those all day.
Very cool.
Yeah.
Uh,
Depreciated over 27 and a half years.
okay, so it's because it's technically not a commercial property. It's a little bit of a faster timeline, but you still get the same type of benefits. So how long have you been working with CSSI?
5 years. Yeah. And it's wonderful for me. I can, I can be in Europe. I can be in Florida. I can be wherever. I travel a lot.
Do
And
you need an
so
assistant? Can I?
I'm telling you, it is a really nice next thing to do as a real estate broker when you no longer need to be in your market. It's a because you have a tremendous amount of expertise and connections and relationships and things like that. And you never have to be anywhere. And we also we have a company that does our site surveys as well. They're part of our company, but they do the site surveys for us. I just had one in Hawaii. Unfortunately, it wasn't. I couldn't justify going to Hawaii to do the site survey, so we used someone from the company to go.
That would have been a nice trip.
Yeah, but any 50 states.
Tell me. I mean, like, it sounds like it's a win-win, whether or not you go through with it. Just doing the investigation. Is there a cost typically just for the investigation?
No, just as I said, I need the address, the purchase price, the improvement dollars, and the when you expect to be occupying. And if I have that, I can get you an estimate. And it's just a really good thing to have as part of the equation. You don't have to do it. I'm happier if you do it than if you don't. But anytime you're looking at a property, it doesn't hurt to have that number in front of you.
Well, tell me about some fun success stories that you've had recently with some of your clients.
It's fun success stories. It's just everybody's always happy. Like I have one client who owns. He's local here in Metro Detroit. He has auto repair facilities, right? And his accountant told him, you don't need a cost segregation study. I take care of this for you. Don't worry about it. Anyway, we did the cost segregation study on one of his facilities. We saved him $50,000 that he didn't know he had. And then we proceeded to do his other 5 facilities and his headquarters building. And we've saved him over the past couple of years, we've saved him over $250,000 on his taxes.
Wow.
And that was from, and they're relatively small properties, but it's valuable. And you just wouldn't think, why would you think that you could, find depreciation in an auto repair facility? Forget it. But with doctors and dentists, we have, let's see, I'm going to have to get you see if I can get you can I add this to you for you later? Can I send you I'll send you sort of a case study that'll show
100%.
Pardon me?
Yeah, absolutely. We can try to attach it.
Okay, I'll send you a case study and we'll take that from there. Because it's just always a good idea. The savings are always there, and the ROI is often 25 to 1, 40 to 1 on medical buildings.
Well, we can all use an extra $250,000 in our bank account.
Exactly.
Any great testimonials you've gotten recently?
Any great testimonials? Well, I guess my greatest testimonial is that I have a lot of repeat customers. I've got my clients trained to call me anytime they're looking at something or anytime they buy something, to just let's see what it looks like.
Talk to me about what the best advice is that you ever received. Life advice, business advice.
Life advice is, let's see, don't take any of it too seriously. Yeah. As a woman in commercial real estate, it was always just like something I had to overcome initially was, there aren't any women in this business. Women don't do commercial real estate. It was always an objection that I had to overcome just walking in the room. And what I did was just not take it seriously. It's like, I knew I had my expertise. I knew what, that I was going to be a great beneficial help to any of my clients. And I just had to let them see.
Yeah, that's really cool, and something that I'm sure a lot of our clients and just anybody watching can relate to. And so I think I can agree, because you can't really take yourself too seriously. Sometimes you run into people that have a different agenda, and you just you got to keep living life your way and and keep growing and learning and getting better, and it all kind of works out. So talk to me about your perfect day. If you had, just
a perfect business day,
just the perfect day, and maybe it's business, maybe there's a little bit of fun family stuff mixed into, how would you spend your perfect day if you just had one day?
Perfect day. I would say I had one perfect day doing cost segregation. And I was in Florence, Italy, and I was in my. I like to take an Airbnb for a month, in some place, and just like be in it. And it was a beautiful day. I went to the Uffizi in the morning, and then and looked at the most beautiful paintings, and it was a gorgeous Florentine day. The light was beautiful, the weather was beautiful. And then I got back to my pensione and got on my computer and signed up 3 cost segregation studies that day. So I had three proposals out. I signed them all up. Boom, boom, boom. Got them all started. When I was in Italy, I couldn't start working until the late afternoon. I started working at 2 p.m. every day. And so I started working. I had a beautiful morning looking at art, beautiful afternoon working, and a fabulous dinner. That was a perfect day.
That is a great story. Where it sounds like you're in this stage, you have some flexibility and get to travel a lot. Tell me more about where you've been spending your time besides Italy.
Well, in the winter this year, we were staying in Michigan because my husband had some health issues. But typically, we spend the all of the winter in the in St. Petersburg, Florida. So I get up, I go for a walk on the beach, then I set up my computer in my backyard and work out there. Um, and then travel. I spent a bunch of time in France, like in the Loire Valley and in south of France, and also in mostly in Italy. I like to go to Italy. So we're there. So I'm either in Italy or I'm in Florida. I've enjoyed being in France, and what's nice about it is that I go and spend a month or 2 months in a place and just sort of go have my coffee and walk around and look at art and people in the morning, and then spend the afternoon working. So I can do that anywhere.
That's pretty dreamy. What have you spent any time in South America?
I haven't. It's on my list. Costa Rica, I love, and so
I just got back from Costa Rica on the 15th. Yeah, it's my favorite place. I was my wife and I went there on our honeymoon, and we've been back 17 or 18 times. One time I had COVID, so everybody else went. But
it's
so
so sad.
she's got one up on me there, but I love it. Absolutely love
Well,
it.
I think you and I talked about that briefly about how it's just like a dream come true to be in Costa Rica. And did you get to go? Did you see Did you go out in the evening at all? Did you get to see any of the bats at night?
This time I actually had my dad and his wife came with us, and he isn't super mobile, and so we went to a town called Las Carolinas, which is kind of like a Disneyfied European coastal town, pre-planned town. Every structure and villa or apartment is absolutely unique and stunning,
Wow.
and there's no cars, so it's really walkable,
Because
and
driving in Costa Rica is the worst.
yeah, well, I
You
don't.
don't want to
The
be in a
first time
car
we were
there.
there, yeah, we rented a car and drove across the country, and then ever since then, I got a guy Koyak who he picks us up and takes us around, and we'll just rent a condo or whatnot, and if we want to go on an excursion or do some traveling, we'll have him cart us around. So that's the best. I wanted to have one or two last questions here. If you could talk to your 20-year-old self, what would you tell her?
Oh my goodness. About business, about life,
About
about
life.
about life. If I could talk to my 20-year-old self, I would tell my 20-year-old self not to take it too seriously and to also not not be so hard on myself for every decision is not does not take in the scope of your life. It's like you make a decision, you go with it, you you either live, you either learn, or you win, right? So if you learn, and sometimes the learning is even better than the winning. So I've been fortunate in my life to really have lived it fully, to have traveled a lot, to have had wonderful business experiences, to have had wonderful educational experiences, to love being a mother and a wife. And I think that I would tell my 20-year-old self that you're in for a great adventure.
Any last things that you want to talk about?
No, I think sometimes people are reluctant to, everybody second guesses things in their business, in their lives, and I guess as they should. But sometimes it's okay to take a leap of faith.
Yeah. No,
And the leap of faith should be, get an estimate from me. Doesn't cost you anything. Doesn't cost you anything. And what have you got to lose from having extra cash in your pocket? Take that cash. Take your staff out. Buy yourself that fabulous furniture that you want for your lobby. Use that cash to enhance your business. Anytime you have a chance to take a interest-free loan from the IRS, you should do it. That's my advice.
That's great advice. We will be preaching that from Remy and I will be preaching that from the mountaintops, because this is really such a great opportunity for our clients or other investors to really, it's not like it's one of those things that not everybody knows about, but once you learn about it, it can be life changing to some extent. To you're gonna get that deduction over the course of the time that you own a property. Why not get it sooner, so that you can do something or reinvest it and move things along faster. So
cash is king, baby. We're all about putting the cash in the hands of the people who use it best.
That one I think will be a nice short on YouTube. Cash is king.
Great.
Awesome, Carole. This was so much fun. I really enjoyed having you on. It was really, really interesting. We'll definitely grab that PDF and make sure it's available to anybody who asks for it, and so that they can have a little bit more details. And if you do have a case study or two that you can share, we'd really appreciate it. But I really enjoyed this time, and it was really cool digging in and learning a little bit more about the cost segregation process and what it would be like working with you, and how how it can benefit a business owner and somebody who's buying a commercial property. Thank you so much.
Bye, Nick.
Bye-bye.